So Europe is building the bridge. What is happening in Taiwan? Because Jason, you are, from what I hear, single-handedly creating the regulatory ecosystem there, but working at amazing speed, and would love to hear your perspective, both on Taiwan and on the broader Asian ecosystem, if you're willing to share.
Sure. So hello, everyone. My name is Jason Shi. I'm a member of parliament and a legislator from Taiwan. And I'm also known as the crypto congressman. And it's a nickname.
He's not kidding. He is known as the crypto congressman.
And it's actually, after this event, if you come and get a business card from me, it says AKA crypto congressman. And I got this mandate from the Speaker of the House, and he actually allowed me to print that on the business card. Yeah. And so I was a tech entrepreneur before becoming a member of parliament. So I focusing on developing interface between public policy and technology. So one of the crucial areas that I'm addressing is blockchain and cryptocurrency. And now we are focusing on developing the very first STO regulatory framework in Asia. We are set to release the STO regulatory framework in June, which I draft and introduce. The basic concept would be to eliminate or exempt STO from security laws. But the regulations concerning the fraud will still apply. And in addition to that, I am also focusing on technology adoptions of the blockchain in across different sectors and in enterprises level. So in Taiwan, we are developing the first electronic ID system called EID, also known as Taiwan Global ID, where we converge social security data, health data, and all other intelligent data into one ID on blockchain, and which will allow you to basically use this and serve as a way to manage your digital identity. And also we are developing on a national level, National Center of Excellence for Blockchain. We've now identified 4 verticals which we will implement blockchain across different sectors. Blockchain plus medical, which we will harness our huge, vast volume of medical data with our universal healthcare program to release the first blockchain medical program. And the second vertical will be blockchain, IoT, and smart cities. We've now identified 3 major cities with a total population of 17 million people to implement IoT-based smart city applications enabled by blockchain. And number 3 is agriculture. We are very big on food safety and all the important elements that we will drive the most important food safety-based solutions on the blockchain. And the last one is obviously trade finance and financial inclusion, which include a very important issue that I'm hoping to address today is central bank digital currency. We are now experimenting with a part of our foreign reserve to be used as the national digital currency to use for trade finance. And across the board, we are putting a lot of efforts in blockchain, which we believe will be an important economic driver for our country. And in terms of regulations, there are 3 steps that I'm putting forth. Number 1 is to create a business category for crypto-related business. So if you come to Taiwan, you register your business. You can register through Ministry of Economic Affairs, and you can actually register your company as a crypto company, and which I think gives the legitimacy of your business. And Taiwan government recognize crypto business. So that's number 1. And secondly, I also draft a law to incorporate cryptocurrency into Anti-Money Laundering Act, which also gives the industry a opportunity to be regulated. So I think there's a lot we can do together. And Taiwan is a small place with 23 million people, but we have a lot of technology know-how. And oh, by the way, we are issuing the blockchain visa, which will be basically used for entrepreneurs who come to Taiwan to set up your company, and will issue entrepreneurship visa on blockchain. And my friend there who worked on HTC crypto phone, Phil, please raise your hand. Phil, yeah. We're also doing a digital wallet on the phone. So that's a lot we can share later on. Yeah, I'll stop here.
That's a pretty extraordinary array of activities, and I don't know what it is about islands that makes them so successful when it comes to blockchain regulation. But moving from Taiwan to Bermuda, tell us, Dennis, what's happening. We heard from the premier last night at dinner a spectacular array of activity in Bermuda as well. How do you see the state of play in that jurisdiction?
Okay, so just to introduce myself, I'm Denis Pitcher. I worked building trading systems for about 7 years for a large value fund, institutional fund manager. I also am a tech entrepreneur, so I am a coder, built trading systems, as I said, and I've been hired on as a FinTech advisor to the Premier of Bermuda. For those of you that were there last night, he spoke a little bit about that. We are a very small island. If Taiwan is small at 23 million, we have 63,000 people. So small by a whole other kind of definition. And to understand where we're looking at in this space, it goes back to part of our history. In the late 1980s, early 90s, we established ourselves as one of the leading offshore jurisdictions for insurance and reinsurance. The way we did that was really by working hand in hand with the industry, and we have a single regulator, the BMA, the Bermuda Monetary Authority. They, along with the government, like the legislators and the industry, work together to move quickly to be able to deliver the right kind of change and establish the right kind of rules that could allow our reinsurance companies and insurance companies to grow quickly. And that really established us as the leading center in reinsurance around the globe. We don't actually do much in the way of tourism. We do have a tourism industry, but it pales in comparison to our international business industry. That set the foundation for our approach with digital assets. So we had created a task force back in September of 2017 that was dedicated to investing the opportunities in the space. We happened to come here last year. I wasn't part of that. I've actually only been in this role for about a week officially, and this is my first panel, so bear with me if I'm still kind of getting
You're
comfortable
doing fine
with this. But we came here last year, and we basically said at the end of these sessions that anyone who wants to come to the island and sit down with us and help us map out a plan for how we can regulate this industry, please come and visit us on Monday. And a bunch of people came. And within 5 months, we introduced a digital asset issuance platform, a Digital Asset Business Act that allows us to regulate exchanges, service providers, and businesses in the industry, and it's very robust at a very high standard. We've created banking legislation to make it more flexible and for us to open ourselves up and work with banks that want to do business in this space because it is a big challenge. We have created immigration, like a specialized work permit system that allows you to have 5 work permits as part of a FinTech business. And we are looking, like what we announced last night was our latest effort. We had investigated a lot in an EID platform, and we've started taking the view that we want to be a facilitator as opposed to trying to drive our own, because the big challenge right now is KYC and AML is a huge cost for almost every business in this space. So the more we can do to facilitate and make it more efficient and create regulatory support around it, the faster the industry can grow. So we're looking at how do we partner with other jurisdictions, how do we come up with a standard, how do we really lead in this space and make a name for ourselves as the top highly regulated, fast-moving jurisdiction that's kind of creating what we refer to as the Bermuda Standard.
So, Jason, that's extremely helpful. When I was talking with a leader in another small island country, and again, Taiwan isn't that small, he said that in the United States, you're so big and you're so diverse that you can make mistakes all day long and you're still going to have enough depth to overcome those mistakes. But when you have a smaller jurisdiction, you have to have a very high degree of discipline. We seem to be seeing that in Switzerland. We seem to be seeing that in Taiwan, in Bermuda. Is that a fair characterization in your view?
Sorry. Yeah, definitely. I think blockchain represents the I think the very nature of this technology is decentralized, and I think when you think about the size of the country and the sheer scale and the complexity to manage the system, and you can tell why countries like China or U.S. are scared by it or are very slow moving in this regard.
So you can stop right there, because that was exactly how I hoped you would set up Alan's conversation.
Yeah,
so
we did rehearsal together on this.
it worked perfectly. So Alan, respond. I'm hoping that this will be inflammatory and contentious, because we need to keep people awake at this point in the afternoon. How is the U.S. doing by comparison?
We're lagging, right? We're lagging behind. So I'm Alan Cohn. I'm a partner at Steptoe & Johnson. We're a law firm based in Washington, D.C. I co-chair the blockchain and cryptocurrency practice there. I've been there for about 4 years. Before that, I was an official at the Department of Homeland Security in the United States for several years. I hear some boos and hisses.
You're not getting paid right now if you're at DHS, so we can't be too mad at that.
Right. But I think what the animating feature, if you look at the United States, it's almost like we have, you could have the same kind of diverse panel talking about all the different things that are going on in the United States. This polyglot, this hodgepodge of different regulatory approaches and postures in regulation towards this asset class that are creating a lot of confusion. And we don't have the luxury of the kind of compactness of government and the kind of that can bring that kind of singularity of focus, plus an integrated regulator that can really make sense of the asset class and can say, this is what we're going to do. So what's the current state in the United States? It's actually not, it's actually pretty diverse. I'll start with one issue that we tend to look a lot at, which Denis mentioned, but which most people don't start with now, which is anti-money laundering, know your customer, sanctions compliance. The United States, I think in that area, has kind of been a leader. The United States said early on, whether you liked it or you didn't like it, the relevant regulator, the Financial Crimes Enforcement Network, FinCEN, came out with guides, first a statement, then guidance that said that cryptocurrency is just currency. And so if you're handling currency, follow the currency rules. And that gave a lot of certainty. It was difficult, it was dislocating when it came out, but it provided certainty. It also educated the regulator. FinCEN has been in this space for 5 years now. They understand the space. They've worked cooperatively with a lot of the entities in the space, cryptocurrency exchanges, others. And so from an anti-money laundering, know your customer, sanctions compliance perspective, there are pretty clear answers. We might not like all of them, but at least they exist. On the regulation of financial instruments, we're almost on the other side, and we're certainly lagging the rest of the world. And there's a couple of reasons for that. Number one, I think that the primary securities regulator, the primary financial instrument regulator, the Securities and Exchange Commission, was late to the game. They stayed on the sidelines when FinCEN got in, and it robbed them of visibility over the space. And then with the Dow, the sale of the Dow and then the Dow hack and all of this that came up, they were forced to play catch up. It took them a year to figure out what the Dow was and how they should treat it. And they've kind of been playing catch up ever since. Then they've moved to kind of addressing clear instances of fraud and material misrepresentation, which is good and which is something that they should do, but they've avoided the crux of the issue until now. Kind of going back to what Oliver said, which is, let's look at the heart of the matter, which is we have different types of tokens, different types of assets in this space. And to use the Swiss taxonomy, there are currency tokens, cryptocurrencies. We know how to regulate those. There are asset tokens, financial instruments, and the U.S. is getting to, right, if you're doing capital formation, that's governed by capital formation rules. That's what our securities laws or exemptions to our securities laws. But they haven't got to that third question, which is, if you are creating a protocol and it has a native token and that token is meant to enable access, to create access, enable functionality, and to be used in a consumptive manner, we don't know what to do with that. It's not capital formation. It's kind of a commodity, but it's not. But it's more than a commodity. And because we don't have an integrated financial regulator, answering that question gets caught up just as much in jurisdictional disputes between the Securities and Exchange Commission, the Commodity Futures Trading Commission, other regulators, as it does of the substance of the issue. Second, because there's no integrated financial regulator, no one can say there's a third class of assets that governs in a third way. So I think that we're struggling in that space.
So I want to get to
in.
Sandra for global perspective, but one more quick question. Winston Churchill used to say that the United States always does the right thing after exhausting every other alternative. And we may be seeing that happen in the realm of crypto regulation and blockchain regulation. When the United States gets around to doing the right thing, will that come from the top down, or will it come from the bottom up, from the states up? Because we are seeing some very innovative regulatory activity at the state level.
Yeah, so I think it's going to be a combination of pressure from the states, from the experimentation in the states, and from the experience of the non-US jurisdictions as they come to a consensus. So first, all of these jurisdictions up here and others that folks deal with in Singapore and Hong Kong and elsewhere, there's a general consensus emerging, and the US is going to have to grapple with that. But we're also seeing tremendously innovative approaches. You all are familiar with the recidivist approach of like the state of New York in really ratcheting down on and only allowing the narrowest of categories in. On the flip side, though, you see legislators in Wyoming for the second straight year, supported by the Wyoming Blockchain Coalition and the Digital Asset Trade Association, really pushing, innovative legislation, some of it aimed at similar establishing a similar taxonomy, others addressing questions on everything from money transmitter laws to banking and custody, really trying to, the United States, we see the states as laboratories of democracy, right? Places of experimentation, really trying to experiment with what is a different way of doing this. And I think that as states like Wyoming come upon those solutions and they begin to spread around to other states, that will produce the other type of counterpressure.
So Sandra, you have had truly unique perspective on this saga as it has unfolded across jurisdictions. Over the last year, the GBBC has been present on every continent, events in 35 cities, 50 different events overall. I could go on and on and on, and you've been at the heart of this. What's your take at a global level on who's doing well, who's doing poorly, and where should we look for great things to happen or bad things to happen over the course of 2019?
So I think a number of people in the room may agree with me on this, but I'm going to make this call. 2019 is the year of regulation coming in, and it comes in around the world. And I will give you a couple examples of bright spots that I see. Not only the gentlemen who are here, minus US, sorry. But also, I'll give you a couple examples. So, most people are not aware that, for example, Estonia, very amazing digital forward-looking country, actually does not have any ICO or STO regulatory framework. They are working on that. They're looking at Switzerland. They're looking at examples in other jurisdictions, and they will likely. And they're also looking at the U.S. model, which we'll see what comes out. But I have a feeling it'll probably gravitate more towards a Switzerland and a Singapore model as opposed to a U.S. confused model. So when I look at also Australia, what's interesting there, and we were just there, they are extremely progressive across almost every facet of blockchain you can imagine. And a lot of the use cases are actually around the fact that Australia has a very unique case. It's not so much around crypto, but it's around the fact that they've got awesome amounts. The government has awesome amounts of data. And that data is siloed and actually hindered by data privacy laws. And we actually spoke to the Australian government about the fact they've identified over 500 different privacy laws that have actually been accumulated over the decades of lawmaking that sometimes happen. And
laws upon laws.
Yes, laws upon laws, which often many countries do have that problem. So now what they're looking at is which laws do they need to amend? Do they need to actually potentially augment to get to a place where they know, and they've literally said, we could deliver better services to our citizens by unlocking that data sharing. And so to me, that is very exciting. It's a different kind of regulatory legal making, but they need to do that in order for the technology to advance. So these are very important. It's not just about crypto. It is also around data privacy and how that is managed. So let me go back to Europe. We've got conversations going on about GDPR and how blockchain is ruined by GDPR. Not quite, people. It's a little bit more nuanced than that. And unfortunately, people are confused by interpretations of GDPR, how blockchain is impacted by that. And I think we're still on a debate path on where there's gray areas and getting clarity from the European Union around that. So the good news is there are a number of organizations, of which GBBC is a member, which is the European Blockchain Observatory Group, which has come out with a number of papers. There's also one on GDPR and reports and analyzing these various nuances. And I think where we're going to see continued guidance from EU is going to be very important, because even if, for example, Estonia or some of the other countries like France come out with their own frameworks, at the end of the day, it still goes back up at the European Union level. And frankly, when you think about the global world and the battle of the sort of, next generation tech, you need the blocks. You need the US, China, but also you need a European bloc. Countries on their own that are much smaller, it will be difficult. And don't get me wrong, the nimbleness of a Bermuda and a Taiwan and Switzerland is significant, because they're actually going to set the pace and probably some of the terminology that will be borrowed to actually have the legislation that will be standardized over time. But it is actually the big counterweights, the heavyweights that will actually, when they come in, determine the direction of flow for a lot of this. I'm very bullish that we're going to finally see some real players come in who are serious. A lot of the nonsense has been washed out, not all of it, but a lot of it has. And we're going to start to see businesses being able to be built because there is clarity. Nobody likes uncertainty in the business markets. And right now, in the last 2 years, it's been pretty confused in different places. And I'm going to add one more thing about the US, only because I've just moved to New York, and I know New York gets a lot of flack for,
for a lot of things.
For certain things that have been done. But I will say one thing. I live in New York City. I moved back from London a couple years ago. It has talent, drive, energy. The state itself has just passed a bill. Governor Cuomo has instituted a cryptocurrency task force that is a legislative making task force to review what New York State can do. So don't give up on New York quite yet.
It's a hopeful note to conclude this portion of our conversation.
I kind of have to. I felt like I was getting beat up.
Well, let's take those something you said, because you mentioned a lot of the nonsense getting washed out of the system, but not yet all of it. And at the heart of it, and it's important for us to acknowledge this at the outset, this is why regulation is such an issue. We have seen a great deal of nonsense. We have seen a lot of people using blockchain-based capitalization mechanisms to circumvent regulations that are designed to protect consumers. And we're seeing a number of different approaches to this. Oliver, I want to hear a little bit about how Swiss and European regulators are approaching this challenge, and what the lessons of the ICO blowout of the first half of 2018 are in their minds. And I'm also really interested, Jason, in picking up on what you said about how you are eliminating the regulatory framework around STOs that would normally treat them as securities, but you're keeping the fraud regulations. And what does that look like in practice?
I think there are many lessons learned. I think number one is, I think from a regulation point of view, this is not static. It means it's an ongoing working with the community, understanding where the business is going, because the technology is not standing still. The every year, 20 million last year, billion invested in blockchain technology. So I think getting feedback, how the technology is being used, for example, it's not only a financial service topic, it's also how smart contracts in the future from a civil law perspective will be respected, etc. I think that's important, is that it's an ongoing interaction with the community and reflection, are the existing laws sufficient? Second learning, I have to say, is also to utilize existing laws and design principles just to expand and not going for a dedicated blockchain law. That was something that I think the Swiss government was very clear, is because the rapid change of the technology, and you can do this something like Liechtenstein. They have 200 pages of very blockchain-specific laws, etc. But I think the pace of innovation and speed of changes, I think, requires, and you have to change this every time. I think technology agnostic, but still embracing the change and using existing laws to adapt them is also important. Third, this business is not a local business. I think it's very important.
Almost by definition.
By definition, that means you can provide transparency on how existing AML and KYC regulations should apply for the local business. But I think as we are interconnected through corresponding banks, I think this is a topic that immediately you have other regulators at the table, because most of the financial institutions have business in the US or in other jurisdictions. So I would say, I think something that we have to watch is how the G20, I think there's a working group on that, they promised to come up with a recommendation for, because it's all about AML. No? I think they promised to come up with a recommendation by June, July this year, how they want to tackle it. So what I'm saying is, this is an interconnected business, and in the moment you want to be in the driver's seat, you always have to connect with other jurisdiction and regulator and try to build up, because that gives you also a global network effect.
So we see the European approach. How are you balancing these competing dynamics in Taiwan?
Sure. I fully agree that the year 2019 is the year of regulation, particularly at the time of...
Put that on a T-shirt, folks.
What's that? Yeah, we should. Maybe a tattoo, right? No.
That you'd have to be able to change in 2020, so you may not want it on a tattoo.
No, I think that the what we see now is a vacuum of a new concept of how to regulate something that is, on a very early stage of development, and by not killing it. And I think if you look at how law is created, and when and how and why it was created, most of laws that we deal with today are created pre-internet. And yet, all of the services and products are invented because of internet. And blockchain has given us another opportunity to be able to bring the regulation closer to the actual situations of our daily life. So when I'm approaching the legislation, I think of this in two ways. One is, you can regulate it as a lowest common denominator. For example, you cannot steal, you cannot kill. That's lowest common denominator. But you can also regulate it as a forward-looking way of launching a new industry. And I think that's what the most of the regulators and lawmakers should perceive of this industry. And why I believe STO is important, of all the conferences I've been to in the last 6 months, people are quite pessimistic about STO, mainly because US is moving very slow. SEC always very confused with the positioning and etc. But I feel STO is important because when blockchain was introduced, the cryptocurrency was introduced, it was criticized by no intrinsic value. But with STO, it can give the asset an intrinsic value, and which would allow the old money to get in this industry, and which it would also revitalize this industry by bringing in institutional investors. And I think that's important. That's why it's important, because it would introduce the mainstream folks to get into this industry. And on STO front, most important thing is it's the nature of issuing a token, especially with the asset backing. It's a very similar to issuing a stock. And if we are able to treat it like the way we treat a stock, but then allow it with the flexibility of raising money from like a startup, then we got a game going on. And I think that's how I would look at it. So for example, in Taiwan, the legislation I put forth is to exempt STO from security laws. and then actually recognize investment contract as securities. And then you actually basically give the STO the legitimacy to be issued and to be traded, and which would also give opportunity for other financial products and services, for example, like derivatives and other things.
So Bermuda is very much a jurisdiction that aspires to fill this type of role, to be a leader, to be a laboratory for experimentation. How are you working with the private sector to get that right? Because one of the things that I think governments everywhere struggle with is when you're trying to protect consumers and you're trying to create an environment that's conducive for innovation, it's very difficult to know how you engage the private sector to create the desired outcome. And it seems like Bermuda is going in the right direction. What is the process that you are using to achieve that outcome?
I think it's really about knowing how to encourage innovation and not stifle it, while adding protections that prevent fraud. I mean, when you look at trying to decide between what's a bad idea and a good idea, it's near impossible. I mean, you can look at Apple over their last 20 years. I mean, they introduced the iPhone and it changed the world. Everyone would agree. Great idea. You go back about 10 years before that, they introduced the Newton. It was almost the exact same concept, and it was a massive flop. Now, if we turned around and said, well, because the Newton was a failure, we should regulate it and protect people from ever having to deal with the iPhone, then the world as it exists
Admittedly,
today.
the Newton was kind of lousy, but I'm
it's
joking.
it's a question of technical maturity and what you can do on a platform and if we're ready for it. I mean, we're talking about globalization of capital markets. It's not just about opening up markets to institutional investors. It's about opening up markets to the world. And I mean, you're talking about the long tail of investment where you have underbanked people who can't even open a bank account today. Like the big use that I hear talking to guys that run Bitcoin ATMs in South America is that there are small business owners who have like a retail shop. They want to buy some stuff from China. They can't even open a bank account. So they buy some Bitcoin at like 14% commission so that they can go onto Alibaba and buy some widgets that they ship to Argentina and put in their shop. I mean, that is powerful, and that's what we're really missing from this conversation, is understanding that we need to open up the benefits that the first world has in investments to the rest of the world. And of course, we have to be cognizant of the regulations of dealing with each jurisdiction, but we're going to see smaller jurisdictions and underbanked jurisdictions taking a lead and showcasing to places like the United States that they're missing opportunities and that there really is a global perspective here to tap into, not just what you're going to see from one jurisdiction or like just the EU or just the States.
So Sandra, you are making this happen in a lot of the work that you're doing. You are working in some jurisdictions in Africa and elsewhere that have real challenges around financial inclusion, access to capital for farmers and others in small markets. What is your experience with this argument, and does it resonate? Because I do think, and I'm going to ask Alan to close us out on this in a moment in the US context, but blockchain is a little bit unusual in that it changes the landscape, and it has the potential to reach beyond the relatively narrow, relatively affluent and privileged slice of the ecosystem and the demographic pie that has been able to benefit from the technology thus far and really help a lot of folks at the bottom if done right. And that should make the regulatory arguments easier. Is that the reality that you encounter in jurisdictions where it could potentially have the biggest impact?
So when we think about the paradigm shift that ICOs brought, the democratization of capital raising, crowdfunding, I like to say, global crowdfunding essentially. If you're an entrepreneur sitting in most countries, how easy is it for you to go up and rock up to an angel or a VC firm and be like, hey, I have a great idea, can I get some money from you? It's actually quite difficult. There are only a few pockets of the world where that liquidity exists or that capital exists. So the paradigm shift of the ICO model is actually a pretty amazing one. And we should actually think, wow, if somebody who's got a great idea and needs a little bit of capital could crowdfund that really quickly and there are people who are willing to chip in a bit and they can get going on that business. Wouldn't that be great? Well, I think that's how we started. But unfortunately, the last couple years have shown us that when there are no guardrails, when there are rampant, allowances for fraud and bad behavior, it does go wild. And frankly, we are now suffering from the post-traumatic effects of that. And when I speak to politicians in certain countries, for example, we were in South Korea where that was a major issue. They went through a roller coaster ride of they let it rip, let it happen. I mean, they just, didn't do anything about it. And then all of a sudden, a bunch of consumers got wiped out. What did they do? They went to their politicians and said, hey, I was defrauded. I lost all this money. What are you going to do about it? Well, what do politicians do when they get that kind of pressure is, okay, X, nope, I'll ban it, done. That's not a good resolution either. So luckily, South Korea has now moved towards a bipartisan review and an inching away from the whole banning of ICOs to something more prudent. But you can understand why these things happen, right? We've literally gone up and then down and crashed. So where are we today? When I think about this paradigm shift, I think we need to be reminded of this and figure out with regulators and legislators a sensible solution to go back to that paradigm shift fundamentally. We need to be able to provide access to capital to as many entrepreneurs in the world as possible. And if we can achieve that, in Taiwan, if you can lead that, Jason, that would be amazing.
So we're going to get to your questions in just a moment, get them geared up and ready, because we'll be there in just a second. But Alan, talk us through the politics of this, especially in the U.S. context. Because one of the painful wake-up calls of the last election in the United States is that there are a lot of people who feel that the systems aren't working for them. They feel isolated, they feel disenfranchised, they feel that they do not have access to the capital that somebody in Silicon Valley or Manhattan would have. Is there an opportunity to leverage that dynamic in a way that will lead toward better regulation of this space?
That's a really interesting question, and I don't know that it's one that, it's a lens that the American political system's been looking through when thinking about the rise and the fall, as Sandra kind of recast it. I think that U.S. securities regulators saw really just a mass effort to circumvent U.S. regulations regarding capital formation. And from their perspective, there are ways to raise capital, even at low cost, by taking advantage of securities law exemptions that have rules and requirements that go along. And if you follow those rules and requirements, then you can raise capital and you can proceed. And so the challenge is, of course, that what U.S. security, the way that U.S. securities regulators see that is not the same way as they see it as separated. You de-link these processes from one another rather than this is an integrated effort. And what you are doing when you are buying into a protocol is you are, in a sense, investing in the success of the protocol, but not in the capital formation way, but in much more of a kind of an endorsement of the concept manner. So I think that it would be an interesting perspective to bring to bear if there could be more of an articulation of the democratization aspects and the access to capital, where it can be demonstrated that the types of projects that can come out of those efforts would be beneficial to those communities, and that there would be guardrails and safeguards in place that can protect the individuals who would contribute money to those efforts.
Well, to be continued on that front. We're going to take 3 lightning questions and then have some lightning answers up here. So please raise your hands high, and we will get to questions. I know all of you are brimming with questions about the state of regulation in the world. Please.
You cannot raise capital in any way other than in the ways set out in U.S. securities regulation or in the exemptions to those regulations. But as a result of pressure 10 years ago with respect to opening up capital for ventures, the Congress passed the Jobs Act, which was meant to provide easier access to crowdfunding, and was also created categories of fundraising options under Regulation A that are meant to be easier for entrepreneurs to use, lighter weight, lower cost, less legal fees associated with issuing securities under a specific threshold. What the securities regulator is most concerned with is that there are safeguards that prevent that type of capital raise from getting out of control. So the new categories of capital raising under the Jobs Act put caps on how much money could be raised. That way, with the theory that you couldn't get these kind of enormous raises where there might be prone to abuse or temptations for abuse. There are also still procedural safeguards about filing with the SEC, making certain types of disclosures, and other things of that nature that are meant to protect consumers and to protect kind of market integrity. So I think that at the end of the day, U.S. regulators, and I would imagine all regulators, are going to want to see to make sure that those safeguards are present in whatever regulatory regime is in place, or whatever kind of supervision and oversight regime is put into place for different categories of tokens. But it doesn't all need to be the same, and we don't need to treat any token as if it is a security, or any token as if it is solely for capital formation, if that's not really what the purpose is, ideally.
Yeah, we heard from Sandra a prediction and Jason a prediction that 2019 is the year of regulation. If you are a company, what's one thing you need to do to prepare for that year of regulation? What's one step you should be taking in January so that you're not looking at a world of hurt come December? Very quick, one sentence answers.
I think you need to the right legal expertise on your management team. I think it's very clear. I think the regulator is beefing up. You need this also on your side.
I think you need to evaluate the global landscape and ask yourself what jurisdictions actually work for you. And that's not just about the regulation. It's around where your people are going to be, what your business is, how you're going to grow, and a number of other factors.
I think beef up your compliance teams, and there's going to be a lot of work and research you have to do, and don't be too stingy on the money you spend on compliance. So go for it.
I think it's about the same. It's understanding the global regulatory landscape and that every jurisdiction has different views, and trying to find partners that are building platforms that make this easier. Because, I mean, this is a technology application. We have a lot of potential to add standardization across the various regions and jurisdictions, and adhering to the securities laws and the exemptions. Why build it all yourself?
Don't wait for the regulators to come find you. Assess what rules and regulations apply to you with a clear eye. Audit yourself. Take steps. Take those remediation steps that you can discover through auditing your own operations, and then make a decision once you've done that whether it makes sense to proactively engage with the regulators. Let them know you on some basis other than as the target of an investigation or an examination.
Always a better way to get to know your regulators than as the target of an investigation. And I will add one final recommendation, which is to stay engaged with the GBBC as we work to bring together amazing partners like this to solve these challenges. Let's have a big round of applause for Oliver, Sandra, Jason, Dennis, and Alan, and the amazing insights we've heard today. Thank you.